Welcome to the Insiders Insight podcast, where we share with you the thoughts of the individuals who are working for projects that are changing the world. Thank you to our sponsor, Creditcoin, the building blocks of trust. For more details, please visit the show notes below.
Welcome to Insiders Insight, the crypto podcast that gives you the inside scoop on the latest developments in the world of cryptocurrencies. Our guest today is Will Corkin, fintech and blockchain entrepreneur, co-founder of Mantra Om and microfinance, advisor, investor, and a speaker. Thank you for joining us today. The topic for today is the future of crypto regulation. But before we jump in, could you please introduce yourself and tell us, when did you first hear about the crypto and what did you think about that then?
Yeah, thanks so much for having me, and thanks for the intro. Really nice to be here. Been in the crypto space for the past 6 or so years, actually having gotten into it back in 2016. Way different world and ecosystem back then, to say the least. But it's been, really, really interesting and, kind of amazing growth and progress to see kind of how the entire space has evolved over those years. Definitely with ups and downs, to say the least. But when I originally got into the space, it was the kind of thing that I was really interested in kind of what the tech, meaning blockchain and kind of DLT, was able to accomplish. At the time, I was working up in Shanghai, China, actually, and was doing research and trying to figure out exactly how this all worked. Back then, the educational materials were much more difficult to find and kind of just deliberate and figure out what was legitimate and what was not. But after some time of researching and kind of spending night after night and hosting meetups and talking with people, I finally kind of got a grasp into what kind of the whole blockchain as a tech actually meant. And this led to founding a company back in 2017, which was a centralized crypto exchange at the time with a handful of partners. During that time also did, a decent amount within kind of consulting for other blockchain companies, which was a really great way to kind of get a full view picture of, what was possible in the space and what was going on. And since then have just kind of continued to build and develop and participate within, a number of different projects across the space. And that's kind of led us to where I am now with both Mantra and microfinance. Mantra having been around for about 2 years. We launched in August of 2020 as a DeFi platform and DeFi ecosystem powered by our governance token called OM. And that's, now kind of developed into a kind of a handful of different business lines that, I'm sure we'll get into, from, infrastructure and kind of regulated DeFi to, helping and working with different DAOs and products for different blockchain ecosystems, as well as microfinance, which is kind of really at the forefront of the regulated DeFi space, based in the US, but obviously kind of going after a global market. So that's my, not too short answer on how I got in the space and kind of where I am now.
That sounds really nice. Thank you for sharing. I would like to ask, why did you call Mantra Om, basically? Because it's a very spiritual name. So is this connected in any way with spirituality at all?
Absolutely. So I think, it kind of has a number of different meanings, of course, globally, but also for us as we started the company. I think when we started, we were going, kind of within this DeFi, so decentralized finance space, which, when you really look at the ethos and kind of the strong points with what that was able to do, is, really, bank the unbanked or democratize the way that financial products are, accessible and presented and offered to people around the world. So when you look at mantras, kind of, and Om being really the first of the mantras, it's a way for people to find a, yes, spiritual, but also kind of to find a peaceful balance within themselves. And what we wanted to do was we wanted to take these mantras that people find to kind of balance themselves and bring that to financial stability. So people being able to, through mantras, through repetition, be able to, have financial peace of mind and access these different financial products, whether it's a savings account and earning interest, or taking out loans or lending or even investing in, new products to be able to, kind of better your future and access different returns and do such in a kind of community focused and safe way. And that's really where we started and kind of came up with Mantra as being able to provide, financial peace of mind to people through these different DeFi products.
I really like it. It's great. When I was thinking what I would like to do in crypto as an influencer, for example, I thought that I should start a YouTube channel called Spiritual Crypto, because people, especially when they just start learning about cryptocurrency and they start trading and then they lose money, they go really mad, right? And trading and investment, it's also a lot about managing your emotions and how you can cope with all the feelings that you have inside of you. So that's really interesting.
Absolutely. and even looking at kind of the broader blockchain space, there's always been a kind of ethos of spirituality and connectiveness with community. So we thought it really tied in, besides on the kind of DeFi or trading side, but really just within the entire blockchain space as we help to kind of decentralize all these different business verticals.
Yeah. Now in the community, there are lots of talks about how the governments are helping the crypto companies or not helping crypto companies. And I came to a realization that the crypto community, if you look at the community as an individual, they don't understand themselves what kind of regulations do they want. So what do you think about that, and how do you think we should approach it within the community?
Yeah, so there's multiple different angles, and I'm sure you guys probably have your own viewpoints on where regulation fits into all of this. On one side you have people that think that the market should be completely decentralized without any, kind of regulation and let it play its course and be able to regulate itself. On the other side, you have more traditional people that, find comfort within regulation, that, kind of allow regulation to lead in terms of what different pieces and instruments that they will participate or invest within. Obviously it's very difficult, and this is where a lot of the frustration within the space has kind of come about over the years, is, it's difficult to be at the cutting edge in terms of developing very fast and bringing these new innovative products to market, and then waiting for, regulation to catch up, or, them saying that it's not legal, even though there's nothing kind of within their structures or laws or bylaws that actually say, against that. So, I think it's a very fine balancing act. Regulation will never really be at the forefront in terms of deciding how the market's going to move. It's always going to be a little bit behind innovation, and innovation really does need to be first. But I think what we are seeing with regulators, and this is what we've seen with both, Mantra on the Mantra Finance side, as well as Soma Finance in the US, is, these regulators are open to learn, and they're open to bringing these innovative products to market, but they need to be kind of within the conversation. So I think that as long as, these regulators are in the conversation with the different projects, with the people, with the communities, in terms of, what they're seeing, how it's being built, kind of what the goals are, it opens up a lot of avenues for, how these different laws end up being created. So kind of we see, and we've taken a hand-in-hand approach where we want to develop with, kind of the regulators as part of that process, so that, when we actually are bringing these different pieces to market or innovating, it's not just kind of going to be blindsiding the regulators and completely out of nowhere, but they'll actually have, some sort of idea into how it works, so that they can grow, with ourselves as well.
Hi, Will. Sean here. I just wanted to preface this with the fact that I'm happy projects like yours exist, projects like yours collaborating with regulators to see what other solutions there can be. My only concern is, I think that every time we've seen regulators get involved, I feel the markets just tend to get worse off. I've not really seen many success stories with regulators, and I'm just wondering, why do you think that's going to be different with crypto?
Yeah, so I think, a big thing with some of the kind of the regulators or announcements in the past is yes, they've, it's been a bit negative with some of the pieces that they've come out with because it's been directly targeted at specific companies or specific, trading venues that haven't really proposed anything positive or actually had anything to give in a productive way. That's what's kind of led to, of course, people are going to have negative sentiment if they come out and say that, these assets are securities or, this exchange didn't follow, proper AML, anti-money laundering processes, or things like this. I think the media and of course, with what a lot of the regulators have kind of put out, which are, reactionary to how these products and projects are actually operating, it is, fairly negative. But I think, as we're starting to move past them going after bad actors, we're going to start seeing, more announcements about, them releasing licenses so that people can work compliantly and legally within these jurisdictions or offer these different products. I think that obviously the media does a really good job of kind of painting the negative pictures just because, those sort of headlines sell. But, I think we're going to start seeing a lot more and more pieces about, how regulators and, how different licenses are actually emerging, how there are correct ways to do it. How there is a, proper process for people to be, either trading or investing or launching or, doing anything kind of within the ecosystem. It's just been, kind of a lot of the bad announcements up to date. But, I wouldn't just think that everything in the future will be based off of what we've seen in the past.
Call me a skeptic, but I just don't think that's going to happen. Look at what has happened with...
It's tough. It's tough to think if it will happen or not. Of course, once it does, then people will be like, okay, at least it's moving in the right direction.
But mean if it does?
Looking historically, it's difficult right now. But, I'm sure if we have this conversation in, the next couple of months or year, we'll see that a lot of progress has been made from where we are right now.
So I was going to bring up the point about Tornado Cash. It just shows such a lack of understanding of the whole situation. And I was going to bring up the situation of LBC, which is a coin where the protocol is akin to the Bitcoin blockchain. And that has been recently labeled as a security 2 days ago. The point that I'm trying to make is if you take a centralized entity like centralized exchanges, what came out from those was the decentralized exchange. And that's a far superior solution in terms of transparency and safety for your user than a centralized exchange can be. And now with all of this FTX and Binance drama, Binance have also implemented this proof of reserves that they're going to try and integrate to the exchange as quickly as possible. So I feel that free market entities have the ability to solve themselves these issues. What are your thoughts about, firstly, the LBC coin and the Tornado Cash situation? And how do you think regulators could actually provide a better solution than what actors there in the market right now are currently suggesting?
Right. So, I guess taking those kind of in stride. So, with Tornado Cash coming in first, at the end of the day, the regulators, of course, their main priority is to protect retail traders, retail investors. But on top of that, it's a big part of having KYC and AML. So with Tornado Cash, a lot of it's with AML, which is anti-money laundering. And, that's being able to completely, in a black box, obscure, what parties are actually trading different assets. So, I don't think someone like a Tornado Cash will ever be seen positively in the eyes of regulators because its real purpose is to completely obfuscate where money is coming from and where it's going. There's too much counterparty risk, especially within, the space of who could be on the other side of those trades to make it something that, any person or organization can comfortably say that they know that their money isn't being transferred to or used by, terrorist groups or illicit countries or people. So, yes, there's a market for those, and I don't think they'll ever kind of go out, but they'll never be seen as being really a positive thing in terms of, looking at who the different bad actors and bad players can be. In terms of the LBC token, in the US, and this kind of goes more as well towards just the general tokens and how they operate and how they enter markets. in the US, 99% of any sort of digital asset is going to be a security, whether it's a token, whether it's an NFT, an in-game playable. Most of the time, those are going to be securities in the US. There's always been, regulatory arbitrage in terms of where people can operate. In the US, they're all securities. If you want to, kind of go around and have it traded as a non-security, then can trade in a number of other jurisdictions around the world, completely comfortably and completely legally as a utility. But what it cannot do is, be in the US without, kind of coming out and saying it's a security. But, something that we're seeing, and this is, especially through one of my companies, Soma Finance, is there actually is a, correct path forward to issue these digital securities to retail or accredited or institutional users. So in the US, there's been, private placements, and these different offerings have been around for, decades. In the US, we have, a couple of these different reg exemptions that allow you to offer, different assets to US retail. So that's through something called a Reg CF, which is the US crowdfunding issuance, Reg D to accredited, Reg S to international retail, and then things like a Reg A plus, which is like a mini IPO. So, with something like LBC, you can operate in the US as a security. You just need to enter that market correctly. So you need to, do a Reg CF offering or a Reg S or a Reg D and actually issue your token as a security in the US. It's really not a difficult thing to do. Through Soma, we'll actually be launching and doing a Reg CF for our Soma token beginning of next year. And, that'll be a registered security in the US. It takes, let's say, 2 to 3 months to do kind of, an audit and paperwork, and then issue it. But then you can actually rest assured that that asset, isn't going to be in violation of securities laws because it's actually issued as a security. Of course, there are benefits because now you can actually have it give off different security-like features, for instance, dividends and kind of different rewards, which hasn't really been able to be done before. But now, because we call a spade a security, that can actually be done. So, with different projects and tokens like LBC, it's just a matter of doing it right, especially in the US where there is a very clear definition of what's a security and what's not a security. Other jurisdictions where, utility tokens are such a thing, then that can still operate in those jurisdictions without, registering as a security because it's not breaking any laws. So it's just a matter of doing the right thing in, these specific jurisdictions that require and have different, structures for how to actually do it. But that's also, a big kind of breakthrough with what we've been developing with the regulators in the US, that there is that clear path forward, that we are able to actually issue these tokens and have them trade in the US legally and compliantly as securities. So I guess, sorry, go on.
I feel that we're looking at semantics here because everything that you've said could also apply to things like pieces of art. If, whoever is the world famous artist today and like our modern counterpart to like Van Gogh or something, if he painted an art and people, and the art gallery world is very opaque. So we're seeing buyers, they buy art pieces and they have the art galleries basically pump up the price. Why isn't that labeled as a security?
Absolutely. I mean, I think that, there's a number of other kind of traditional systems in place that are completely incorrect that, really should go under a microscope again. I think even with people thinking that crypto is, only used for illicit activities, obviously being in the space, we know that with blockchain and having full transparency, most of illicit transactions are still done in fiat currencies.
Yeah.
So I'm not saying that, these other ways are right, but, with the artwork, it's with how it's traded in terms of kind of the time. So one of the kind of the big ticks that turns a token or like an NFT, let's say, because of, we're talking about art, into a security might not be the actual NFT. It might not be that actual piece of digital art, but then it's with how it's traded and the frequency of how it's traded. Because if there's, possibility to have it traded, multiple times every day and not just in a, once every month or once every quarter or every year, that's what actually turns it into a security with the frequency of how they trade. So there are, small differences with, some of those traditional systems, like, the kind of the art world and how people trade art.
Yeah. So this is semantics, surely. and furthermore, what I find troubling is that I think that if you're looking at financial products, perhaps there is a, precedent to set them as security. But when you're thinking about basically creating innovative rails that could really change the landscape of e-commerce and hence how society is structured, especially from an inequality perspective. And then calling them a security, I think we've got an issue here. I mean, I've heard that the SEC.
But how securities, how securities are actually traded and everything like this, just because it's a security doesn't mean that it's, completely making it untouchable for people, or it's this, incredibly difficult thing to participate in. It's still, something that can be obtained and traded by people around the world. Case in point is, us bringing public equities on chain. These are still one-to-one backed. You still get voting rights, you still get dividends, but being able to refer anyone around the world to be able to access that. Just because it's a security or a public equity doesn't mean that you're, completely turning it off to people around the world, or in, kind of a mass adoption to actually use it. It's just, how those projects report and stay transparent and make sure that, you don't have instances like what's happening now with, companies that are, completely illiquid or operating incorrectly. So I think maybe one of the negative viewpoints is just with the word security and what they are, because it still keeps it open to what these are able to do.
Not if your ultimate vision is to eventually have your baby become a decentralized protocol, because then there isn't a centralized entity to do all of the registration and whatnot. Right.
But that's with the protocol. So, but the different assets on it would still, if you're launching an asset, there's someone that's created that token. There's someone that's created that economic, structure behind it for how that company is going to grow and how there's going to be value brought to that token. So like, yes, if you're let's say Uniswap Labs, by, building just the kind of the swap technology and the smart contracts for people to trade these different assets in a decentralized manner, yes, you are right. But that's also the thing that, Uniswap Labs could never turn on the profits and dividend distributions within their platform, because then that would be, breaking into a security of what, especially the Uni token is able to do. So I think that's, two different sides of it with, building the actual decentralized protocol, but then also, who's actually running these projects that are actually going on to these protocols.
So I do understand what you're saying. The Uni token cannot receive dividends, because as soon as it does that, it will be deemed a security. And I think that's where my issue comes from, because ultimately it's not trying to be a company with an expectation that you'll make profit, right? All it's trying to be is a protocol that can in itself protect itself, of which in this world you need some sort of capital utility. It has to be valuable from a monetary sense for people to be willing to purchase it and protect the protocol. And this is so different from anything we've ever seen in the TradFi world. So I think that's where
although I would say that, Uni having built in, their whatever 0.3 or however many bips percentage of fees that go to the protocol, then that alone is showing that it's built it so the protocol makes money, but it's a revenue generating organism. Because if they didn't have that, then they would just have it all going to, these LP providers, or just not have it on it at all. So there's just free market trading. So I think they, of course, the people that started Uniswap and have Uniswap Labs, they created that so that it would be a profit and revenue generating company. And have, done so successfully, I would say, considering they have, billions of dollars of trading volume and revenue that go to the protocol.
No, I have to disagree. The thing is, value drives security. Who would be willing to purchase the token and hold governance over it if it didn't accrue any value? So if anything that accrues value becomes a security, that I think that I have an issue with that.
In the US, yes. So in the US, because that's just how the securities laws are structured, then that is how it, how they've said that this is going to be the way that things are going and the way that things are for crypto and tokens and these assets built on blockchain. But having said that, it's not how it is in, other jurisdictions around the world. So I think, probably where a lot of the pushback that you probably have with this is on the way that the US regulation works and, kind of their effort that, with Howey Test and a couple of the other kind of securities thresholds, how they state, what's a security and what isn't a security.
I think my final point on this would just be, I think the way the states are basically doing their regulation is going to really slow down innovation in this space in America. And I know a lot of the big players in the industry feel it. And it's a shame because you can see that the way the American governance system is going, that the states will be in a slow decline going forward. There's just too much red tape, and it's such a shame because everyone in this industry is here to change the world in one way or another. And I think that we have a really amazing chance to utilize free markets to solve most of the world's problems, including inequality. And I mean, I don't know how the crypto industry can thrive in the States when everything will be labeled as a security.
I think it's a very fair point. I think that, yes, of course, it has always been maybe a couple steps behind because of how they've structured it and made, things most of the time a security. But I think that even though this has been the case over the last couple of years, they really are starting to make moves to open it up. And this is, again, kind of case in point with the license that we developed with the SEC and FINRA for the Soma Finance side, of them having, a clear direction in terms of how different digital assets and tokens can actually be issued to US peoples, whether they're retail or institutional, and how these companies can operate. I will say that the one upside, especially with today, is, looking at kind of everything that's happened with FTX and Binance. FTX is, now more or less illiquid. And, to what extent we're about to find out, whether it was, $1 to $6 billion. But as they've kind of halted all of the withdrawals on their international platform, FTX US is still open. FTX US, because it had to kind of fall within, the parameters and the different, structures of being a, US company with US retail participants and traders. It actually manages to stay open and people there can actually withdraw their funds. Whereas on the international and, a bit more laissez-faire platform, those are now locked up, potentially for good until, CZ and Binance is able to do due diligence and see kind of where all the pieces lie.
Yeah, it's definitely a double-edged sword if you look at that in this perspective. I don't know, for me it's just very sad, even like to go back to LBC precedent, that the laws that were like made in 1933, like almost a century ago, still affecting the innovations that are taking place now. And if you see at the world of crypto, like we see that every week is so many things are going on, it's changing so fast. And yet we have to comply with the laws that sometimes are very, very outdated. So yeah, that's a bit sad, at least like for me. And yeah, but to finish it off on the more positive note, since it's an off-chain podcast, we would like to ask you, what do you do in your free time when you're not working? What are your hobbies and how do you spend time off-chain?
It's a great question. And, I think that especially in the space, it's, incredibly important to kind of take time offline. As a business owner, especially within the crypto space, where a lot of what we do is retail focused and we have a big community, it's hard to ever go completely offline, just as, we're kind of constantly talking with our community members. But, here in Hong Kong, I have 4 dogs. So, a lot of my time outside of the office and outside of being, quote unquote on chain is, spending time with them. Hong Kong's an amazing country where you can actually, within 30 minutes, you can be on a hike, you can be on a beach, you can be on, some of the biggest malls and kind of shopping centers in the world, or, at, any sort of international or local kind of cuisine restaurant. So, a lot of time hiking and a lot of time kind of spending outdoors with the dogs, as well as just kind of exploring Hong Kong. And then, traveling, of course, is, conferences in the space are back in full swing, to say the least. So it's been great to really connect, IRL with different partners, investors, friends and projects that, a lot of which have only been talking with via phone calls or Zoom over the last couple of years. So, it's been nice to finally be able to kind of catch people in person and start making the human connection again.
Yeah, you're right. Hong Kong is a truly unique place. You can be in the city center and then within half an hour, you're in a Lantau Island that looks like it's like since forever, basically. It hasn't changed a lot.
Exactly.
It's quite amazing. I was living there for 2 weeks, 4 months ago at Lantau Island, and I didn't feel like I'm in Hong Kong at all. Like I could see the skyline, right? But it felt
Yeah,
very weird because it's just a village and like so small. Yeah. Anyhow, thank you
absolutely. I
so
mean,
much.
you really have those amazing discrepancies. You can be, I mean, it's like proper Southeast Asia, and then you go to
Yeah.
the other side, and when you're in Central, it's like you're, I mean, in a crazy built-up metropolitan area.
Yeah. Yeah, very big contrast. Thank you so much,
Mm.
Will, for joining. It was Will Corkin with us, the co-founder of Mantra Om and Summer Finance. Thank you so much for joining. We would love to have the podcast with you again, maybe in a year, to see how your ideas are changing and that the future developments of your projects are going to come in place. Thank you so much and have a nice day.
Yeah, thanks for having me. Really nice talking, and I think when we talk in a year's time, we'll hopefully see a lot of really progressive development on the regulatory side, both in the U.S. as well as globally. So exciting to come back, and then we can reassess the ecosystem. But thanks for having me.
Definitely. Thank you. Goodbye.
Bye now.
The Inside is Insight podcast is meant for informational purposes only and should not be considered as financial or investment advice. Nothing expressed in this podcast should be construed as a solicitation, recommendation, endorsement, or offer to buy or sell any financial products. Information expressed by the host or guest of this podcast does not necessarily reflect any views of our sponsors.